The topic for today's episode is really just going to be, the state of the economy, what Sharad and I have both been seeing in the different markets that we're in, how things have really changed since COVID. And I mean, man, COVID's been over for, is it 2 years now? Has it been that long?
I don't know. If you live in California, you don't know if it's over or not.
Yeah. Well, there you go. There you go, man. That's true.
Yeah.
That's true.
Yeah.
So with that being said, or go ahead, please.
Yeah, no, I was going to say, I think I would say like it's still this year that we noticed like the biggest shift, like in terms of slowdown. I think, of course, like interest rate, given where they are right now, is like the biggest factor right now. There's still people out there looking to buy houses, but there's no inventory. Like you look at interest rate is, as of right now, it's over like 7% on a 30-year fix. And it's high. And, I have friends that bought their houses like in last 3-5 years, and they have a 30-year fixed mortgage of less than 3%, right? Less than 4%. And they want to move, but they don't want to lose that 3-4% mortgage, because you go from 3-4% to like double that, for the same mortgage that you were paying on, let's say, $100,000 house, now you can only buy $60,000 house, and prices have only gone up. So you don't
So you're saying that people have, because we've gone from about, and I'm looking at prime right now, and I'll share my screen with you just because it'll help me and you chat about it. If you're listening to this, you won't be able to see it, but no big deal. But this is prime, basically historical prime rates. And for those that aren't aware, prime is the interest rate that the bank gives to its very best customers. Typically, if you're doing commercial loans, you're typically going to pay prime plus 1%, 1.5%, maybe even a little less, but you're typically going to pay a little bit above prime. But the low, from what I'm seeing here in the last 3-4 years, was in March of 2020, and it was at 3.25%. And just as of July of this year, so what's that, about about a little over 3 years?
Yeah,
we've gone from 3.25% to 8.5%.
Right.
That's more than double, man.
Yeah. So if you look at now, if you just factor in the interest, the mortgage payment, that's like crazy. It's more than double. I mean, that's not the interest rate, but it's like, it's in relation to that. But when you look at like literally the interest rates have doubled in last 3 years. I think that's been the biggest challenge, that homeowners don't want to sell and lose that low interest rate. I think I was reading somebody the other day, like the tipping point is 5.5% for most homeowners. So if it hits that 5 to 5.5%, that's when people are really willing to just say, all right, I'm comfortable with 5 to 5.5% interest rate to go ahead. But it's like 7.5% right now. That freaks people out. Like, I bought my house where we live in California in April. We got 5.875%. And it was 7-year ARMs, 30-year amortization. If I were buying right now at 7.5, I don't know, I would seriously consider. I would be like, you know what? Let's just rent out for another year or two. Let's just see where the market is going. I think for me, the trigger was like 6%. If I was able to get below 6%, I was like, okay, I'm comfortable. But like 7%, 7.5%, that makes me a little bit uncomfortable.
It is. It's high.
It is super high, man. It is super high. And then the challenge with that is